Two of the more important pieces of a homeowner's insurance policy, specifically in Michigan, are coverages D and E. So the D is pretty basic and easy to understand. It's called loss of use. It's also known as additional living expenses. That's another term that people use. What that essentially does is, let's say you had a home claim and that claim ended up causing you to get moved out of the house. You have to go rent another place to live, or you have to pay any additional living expenses. Let's use some examples. I had a fire in my kitchen and it's going to take 7 or 8 months because the materials are backed up from the contractor. Whoever you go with, there's no limitation on the contractor as long as they're licensed. 9 times out of 10, it's going to be okay. Going to that contractor, we say, we want to get the house rebuilt. We had a fire. Here's all the damages, yada, yada, yada. You've got those coverages. Part A is the house that's covering that dwelling. Part B is what we talked about in the previous video, which I'll link here at the end, which is your other structures, and Part C is the personal property. So like your fridge and your TV and your couch and all that stuff is already being taken care of. But now that I can't use my kitchen or I can't functionally live in my home, I've got to have that coverage D, which allows me to move out of the home. How am I going to rent another place? How am I going to pay for someone to come over and mow the lawn? Because I don't have time. I can't get over to my house to do that stuff. How do I pay for the extra gas for me to drive? Because now I'm 5 miles further away from my job than I would be if I was at home. How do I pay for that 3 weeks of living out of a hotel and I have to pay for McDonald's foods and all like the things, right? All of the things that add up to living expenses that you would normally not pay for at your current home. Sometimes, and a lot of times, you'll move in with a family member temporarily and it will pay for that family member within reason. You got to talk to the adjuster and figure that part out, but it's going to allow you to pay those living expenses while you're not there. Commonly, you'll see different levels of that coverage, so you can have anywhere from $50 to $80 to $100 and some odd $1,000 for that coverage. It's really simple to understand how much you should carry. So take what your current bills are today, or month to month, and divide it by, let's say, 18, just in case it was 18 months to repair. I don't think it'll ever go that far, but let's just play the safe game. In that scenario, if your living expenses are more than what your cost of living, that coverage D, is going to be, you may want to up that a little bit. Some of the companies that we work with actually allow you to do unlimited, so they do actual loss sustained. And that means there's no cap. It can be a $300,000 living expense and it's covered. Now, they're going to do like-minded, so they're not going to allow you to rent a mansion, and they're not going to allow you to go rent a Ferrari. Like all of those pieces aren't giving you additional benefits. It just means that if the length of that, you're not going to have to be concerned that, oh my gosh, I'm at month 19 and I ran out of that money, that funds went away. So in those cases, you have that additional living expense. That leads you into what I think is probably the most important piece of the home policy. Honestly, in insurance, it's probably the most important piece on any policy. It's coverage E, and that's called liability. So what that is that's liability that you are towards someone else. If you were to impact their life in any which way, there's likely legal involved. So if you're getting sued is the most common scenario. If you nowadays say the wrong thing to the wrong person, there's a lawsuit that can happen. And it's not even a matter of whether you win the lawsuit or lose the lawsuit, it's how much of the loss you have to pay for. In most cases, if you watch that old TV show, it was the Tiger King. And if you ever watched near the end, they talk about the lawsuit. The lady Karen that she ended up suing him won the lawsuit, but it cost her more money to sue him than she got in the winnings of the lawsuit. It was more of a principle at that point, and money wasn't necessarily the issue. Well, in this case, if something like that happens, your insurance company is going to protect you and be there for any type of lawsuit that you have. If a friend comes over, they trip down your steps, they fall over your shoes, some part of the house were to break apart and hit them on the head, things like that. You've got medical coverage for certain scenarios, but it's very limited. You only have anywhere from $1,000 to $5,000 or a little bit more if you picked it, to cover those medical pieces. When the medical goes beyond that, and let's say it's a $30,000, $40,000, $50,000 medical bill, they don't have a choice. They have to either pay themselves out of pocket and pay for that medical, or have their own medical pay it, or they have to go after your insurance company to get that liability portion paid for. One of the key pieces is that when you're doing these parts, most commonly because of the cost of everything today and the commonality of lawsuits happening, you want to make sure you have the right coverage in this scenario. I've seen it so many times because this is a big price barrier, is that a lot of people don't carry the right coverage. If you're looking for an insurance agent or looking to shop insurance in Michigan, I'll put a link in the description below where you can work with us directly, where we can kind of go over it and find out what's the best fit for your scenario. If you're new to purchasing a home and don't have a mortgage broker or real estate agent, let us know. We're happy to refer you over to one of the people that we work with. Otherwise, the biggest thing you got to focus on is that with those lawsuits, do you have enough to protect you? When we look at that, is who are we going to sue? If I had something happen in my house or I did something out on the road and someone said, I'm going to sue you, are they going to go after my assets and my income? Or are they going to go after my insurance? We want the insurance to be a little bit better or richer than you are today. That way, if they go after you, they're not going to go after you directly. They're going to say, we're going to go after that liability coverage. Sure. Could they go after you after that? Probably, but likely not, because nobody wants to take over your house and make you go bankrupt and they're going to take $100 a month from you for the next 12 months or whatever the case is. That's just not something they want to do. But Mark, I don't have a lot to go after. I'm buying a house and there's just nothing left. That's where people get lost, is a lot of people think that that's the scenario. I today don't have a crap ton of money. I wish I did, right? But I don't. And in that scenario, I would naturally default to like, why would I pay more to cover myself for that scenario? The reason you want to look at that is because it's not just what you have today. It's not the assets that you have in the home, the equity. It's not the cars that you own if you're not on the loan. If you have a savings account, things like that, they can, yes, go after all of those things, but it's your income that you're protecting. In that lawsuit, the judge can award percentages. So let's say they said you are deemed fault, there was not enough money to pay, so 30% of your income now goes to this person until this debt is paid off, this $1.5 million claim. I personally don't think I could live subtracting 30% of my income today. So I would rather protect that just in case something happened. The other piece that you want to be a little bit careful with is when you have that liability coverage, think of the liabilities that you have. That's the word. What am I at risk for? What would I be liable for? What are the pieces that could cause a lawsuit? If you have a large family, that opens up that size of lawsuits coming into the home. It's not just you. You might be the perfect citizen, but you have 3 kids and one of the kids is involved in something that gets you a lawsuit. Now, it doesn't all just end there. You want to have enough coverage on the home to where it doesn't break the bank, but also enough to where you can look at, if you have more income or more assets to protect, then you want to look at something called an umbrella policy. We'll get a little bit further in that, and actually we cover that in our Insurance 101, where it goes over all of the home insurance coverages. If you can't wait until the next video comes out, I will link the Insurance 101 for home insurance. That way you can kind of see what options you have available, what you really should be looking at when you either own a home or are purchasing a home. Also, if you're in the car market, I'll put my Car Insurance 101 for Michigan. That way, if you're looking for the types of Michigan coverages that we offer, it gets a little confusing. Both of those are there available. I would check the Home 101 if you want to go further and deeper into what we just mentioned. Otherwise, I'm Mark with Valor Insurance. We'll see you soon.